Have you guys seen the recent news on what happened to the GameStop shares and how did it all rise? If you haven't seen this, this is what has happened. Yep. This is how the normal investors, that is the retail investors, just screwed the happiness of most of the big hedge fund people who are so called the market movers. Now, what was going on here? How did all this happen? To understand more, do watch the video completely. GameStop is a video game retailer who was once a big company in US, but due to online game platforms like Steam and the ongoing COVID pandemic, made some problems for the business. GameStop was projected to close around somewhere around 1,000 stores by the end of March 2021, which was a response to all the losses over the course of 2019 and 2020. The company even hired some market experts like Nintendo on 2020 and also struck a deal with Microsoft to do a partnership, to do a comeback basically. But still, the future was looking weaker for the retailers. Now, what happened over here is the big hedge fund people they realized that it's a good opportunity for the market to for them to short this market. Okay, short, basically they are selling the stocks, okay, to make some quick profit and probably make billions out of it, or millions or billions out of it. All right, now this backfired for them. Now, how did that happen? This goes back to 2019 when a Reddit group, that's the Wallstreetbets, in that one user is there. I'm not taking the name, you can see that in the video over here. He just mentioned you only live once, and he just dumped $50,000 on this GameStop shares for a long opportunity. Like, he just bought $50,000 worth of shares. All right, and most of the people on that group were questioning him because when he dumped this amount back in 2019, the price was, I guess, around $4 to $6 per share, and everybody was not happy about it because the company was losing its value. It was not sustaining. So most probably it might even go to bankruptcy, and that's why nobody was happy about it. But this guy, I'm not sure what he was thinking, but he was basically putting all the updates in the group, like how much he has lost and how much he was making. Basically, he was not making anything back then, but he was just updating in the group, and that became a big topic. And meanwhile, around August 2020 or something, a person called Ryan Cohen, who was a co-founder of Chewy company, and he got into GameStop. He bought 9% shares of GameStop, and he basically said that he will be doing some good for the business. But that didn't make much of a difference. However, this hedge fund people, whatever they were doing on shorting it, basically selling all the stocks. Okay, now to continue further, to make you understand what has happened, you need to understand what a short selling is. So let me try to make you understand what a short selling is. Basically, there are three people involved. One is the broker, one is the short seller, and the market where we guys buy it, right? Buy or sell it. So basically, what the short sellers did is, like, they borrowed some stocks from the broker for a small fee, of course. So in this case, let's say that short seller borrowed 10 shares of some company, okay, ABC stock. Now, what did the short seller do is they sold this in the market for a current price of $100. Let's keep some hypothetical numbers over here. Now, once they sold these shares in the market, the as they expected, these short sellers were expecting that the price will come down from 100 to probably 80, 90 or 80 or 70, whatever. Now, let's say that after selling into the market, the share loses its value. Okay, let's keep another number, that is $70. Now, short sellers are happy with this number, so what they do is that they buy back those shares for $70. Okay. Now what they do is, now what the short seller did is they gave the shares back to the brokers, all the 10 shares, and kept that $30. That is, they sold it for 100, and the stock lost its value to 70. So the difference is 30. That is the profit. Of course, they also had to pay the fees to the broker for borrowing the shares. So this is how basically a short selling works. All right. Now, short selling is profitable if you're an experienced person. Okay. Now, how this works is like, let's say you are planning to buy a stock. Okay. So when you're buying the stock, let's say you bought the stock at around $100. Now, from $100, if you buy the shares, your maximum risk involved in this is around $100. Okay. But the potential gain, whatever you're having, is unlimited. All right. Now, this is a normal scenario if you're planning to invest in a stock. Okay. You are expecting that the company will do good, and then you're investing in the stock. And if the company is not doing good and it goes bankrupt, you lost your $100. All right. Per share. And if it is doing good, the profit is unlimited. Now, the opposite of this is short selling. Now, so you sold the stock for $100, expecting it to go down to probably 50 or 50, 40, whatever the number is. Okay. And so that is the maximum profit you will get. Even if the company goes bankrupt, your maximum profit is $100. Now, imagine your risk over here. If the stock shoots up, you stand to lose unlimited amount of money. And this is exactly what happened in the GameStop company, where the hedge fund had huge, like billions of dollars of losses. Okay. Now, how did this happen? It all happened with the work of small time investors, or a group of people. I'm not saying about 10-15 people, it's like millions of people in that Reddit group. I hope you understood how this short selling works. Okay. Now, another thing is GameStop's share, when the short sellers borrowed those shares, they had a limited number of amounts. So let's keep it in a number like 100 shares. They just borrowed 100 shares and they were shorting it. Okay. And but they shorted in such a way that I'm not sure how this worked. They could short more than what was available in the market. So basically only 100 shares were there, but they were able to short 140 shares, which is quite questionable according to me. So more shares were shorting, and in US, the thing about hedge fund is whatever positions they are holding, that's available in public. Okay, whether at what price they are shorting and how much shares they are shorting, everything is available in the public. Now, what happened to this Reddit group is, since all these big talks are happening, some of the users in the Reddit group, they digged in, researched, and realized that this GameStop is the most shorted company in US, and it's undervalued. Okay. So what did they figure out is that if they purchase all the stocks, okay, if they purchase all the stocks, and let's say that first I need to tell you at what price the hedge fund people have shorted the market. That was somewhere around $18. Okay. Now, $18, if the price goes down, that's the hedge fund's profit. But if the mass group of people, if they can push up the market, then the hedge fund could lose a hefty amount. Okay. So what did these people do is they bought a huge quantity of call option, because the price is very minimal, like around $16 or $18, and they had money as well. Even though they are retail investors, they had good amount of money, and there are like millions of people over there in that group. So they all bought it, and then they pushed the market up to 160 at one point of time. Okay, this is where the big squeeze is happening. So short squeeze is actually a term used by the market participants where short sellers in a stock who has placed their bets on a stock's fall rush to hedge their position basically, or buy the stocks in order to cover the losses. Like if the if the price what they short is $18, and if it reaches to, let's say, $50 also, okay, they need to buy back those shares because they need to cover the losses, right? Otherwise, if they just don't cover the losses, then they stand to lose unlimited. So all of a sudden, this they push the small retail investors, they pushed the market so high that they had to panically buy back all those shares to stop those losses rising further, right? Now buying these shares created additional demand, pushing the price even more further high. Now all this while, when Wallstreetbets group was bragging about the millions they have gained, the stock market disaster was actually far from over. The short sellers, they doubled down the bets. They were saying that the stock price was manipulated, and this can crash very soon. But even that backfired very badly. Now how did that happen? Many wealthy investors came into picture. They jumped in and pushed the market. And also this amazing guy Elon Musk just tweeted GameStop. Okay, stonk is another name for stock in some language. I'm not sure which one. Do put that in the comment box if you know it. uh, I'm a big believer that your words have power. Okay, just didn't know how much it has worth it. Now this tweet alone has skyrocketed the price of GameStop's share from $150 to around 250 or $300 in a day. All right, and after that, it further raised the price of this GameStop shares to around $467 on January 28th, 2021. That is last week basically, and this has further deepened the wound of short sellers. Now why is this a big news? You see, battles between the investors that have different views of a company's value are common, but this is probably the first time that the ordinary investors have had the courage to cause a large hedge fund such hefty losses. You know, it's like losses are not in even millions; it's in billions. It's important to note that some ordinary investors are even likely to lose a substantial amount when the price comes down, because they have jumped into the market after a long time. Okay, so you should be careful if you're planning to jump into this again. One of the takeaway from this move is that now the hedge fund has to calculate what the human emotions will be, because the power of social media is next level. They need to do a new algorithm to understand the human emotions, probably check out what the social medias are getting involved in, YouTubers, Twitters, and whatnot. So they need to shift their approach. Already one of the short seller, they got who got burned actually. They already announced that they'll do a complete shift in their approach when they are doing a short selling. And remember this guy who put $50,000 back in 2019. Now he's sitting at a staggering $40 million on January 28th, 2021. All right, now it would have reduced because right now the price is around 328, but and he's still holding the shares. I'm not sure why, because if I were him, I would have taken all the profits and just relax for some time. Most probably I won't. I mean, if I even had $50,000, I won't be mad enough to put the whole 50,000 in just a dying stock. That is another thing. That's according to me, that's a stupid decision he has done back then in 2019. But probably 50,000 wasn't a big amount for that person. Remember what he said? YOLO, that is, you only live once. Yeah, I believe in that, but I'm not mad enough to put $50,000 on one particular stock. This time he got lucky. Basically, that's what I would say. So, what do you learn from this event is that first thing, a soaring stock price isn't always a good thing. When you're planning to invest in a stock, you generally want to focus on stocks that are on a bullish on the long term. A steadily increasing stock price is a good sign that a company is growing. But when you see company stock price is skyrocketing over a matter of days, that's a signal. It's something fishy is going on. Okay, it's a red flag basically. Another point is short selling can be incredibly risky if you don't know how to play with it. Because now, in this case, the GameStop share, it's far higher than it should be. Basically, it's almost uh, certainly just a matter of time before it comes crashing down. Okay, for that reason, many investors are now looking to short the stock. That is, betting that its price will fall. But even though the stock is bound to fall sooner or later, trying to time that downturn can be a really expensive move. The third thing is do a proper research as well. Like in this case, the GameStop's thing, they are not doing that great. Of course, they did get a boost when. When investor like Ryan Cohen made a significant investment in the company, but look at the bigger picture. They are still struggling financially, and all of a sudden the stock is skyrocketing. That's a big red flag. So my suggestion is stay away from the GameStop's stock right now. Instead, it's much better to look for companies that have better prospects to succeed over the long run. Be sure to look at the company's overall financial health rather than just its stock price. An organization that has an experienced, consistent growth over many years is far safer than a company's which is rising in a matter of days. It's questionable basically. Also, if you could learn technicals about that, you definitely have an edge on that. Try not to run behind those shiny object. Now this particular stock has become a shiny object for now, uh, but how long, only time will tell. So basically, yeah, I just wanted to talk about this GameStop share, and I hope you liked this video. Let me know your thoughts on the comments below, and as always, if you like this video, be sure to subscribe and hit that like button. It will help me boost my confidence and in making better and quality videos in trading and investing. Have a great week ahead.